Hello, heroines, and welcome back. Today, I'm so excited to bring you Stacey Ellison. Stacey and I met through our local Chamber of Commerce, and Stacey is a divorced mortgage lender, which means that she works exclusively with divorced people. And I wanted to bring her in because when we met and we then had a coffee chat, we had a really interesting discussion around the whole divorce procedure and, do you keep the house? Do you not keep the house? What happens? What doesn't happen? All of these things that I was like, holy crap, I didn't even think to take all of these things into consideration. So I thought I would invite her to join us today so that she can tell us a little bit more about that. How are you, Stacey? It's good to
I'm
see you.
great. Thank you, Alex. I'm so thrilled to be here. Thank
Very
you for
cool.
having me.
No, my pleasure. My pleasure. So, let's just get started with an easy one. Tell us who Stacey is.
Okay, so my name is Stacey Ellison. I am a certified divorce lending professional, and my company is Divorce Mortgage Solutions. Um, my background is in the mortgage industry. I've been here for about 30 some odd years, and what I have found is that um, people going through a divorce don't really know what to do. And it all changes when there's a divorce. All the underwriting guidelines change a little bit, and it's kind of like a puzzle. And I love
Mm,
solving puzzles. Um, so I jumped ahead. So I am a mom. I've got a 19-year-old daughter in college. I'm a doggy mom. I got my little sidekick here who's behind my thing. You can't see, but she's here watching. Um, I love helping people, whether it's buying a house, refinancing a house, or figuring out how the house gets dealt with during a divorce. Um, it's not as easy as just saying, oh, I'm going to take my spouse off. You can't do that. There are a lot of different options if you're keeping the house or deciding what you're going to do if you're not keeping the house and where you're going to go. So I help people figure that all out, and I work with the divorce team, the family law attorneys and the mediators to make sure that the settlement agreement is in alignment with mortgage guidelines, because what might be a legal option isn't always a mortgage option. And what's the point of going through all this pain and work to get a settlement agreement if it's not enforceable? So
yeah.
that's where I come in answering questions, making sure that if you want to keep the house, you can get an approval. And if you're looking to buy something else, that you can get approved for whatever it is that you're looking for.
So there's so much to unpack in there. So we're going to kind of go through everything, but I was curious, how did you get started with focusing specifically on the divorce part of this whole financial thing?
So I kind of stumbled upon it, to be honest. There was a time about 5, 6 years ago where I happened to have several clients who were either going through a divorce or recently divorced, and those transactions were a little painful because of the way the settlement agreement was structured or the way their alimony and child support was structured. And I ran into these roadblocks and had to figure it out kind of on the fly.
Okay.
And like I said, I love puzzles. So through the process of these transactions, I did some searching and I found the Divorce Lending Association, which is an organization that specifically trains mortgage loan officers in all the nuances and caveats of divorce lending. And I went through their training and got their certification. So yeah.
So for somebody who's going through a divorce or who's
Mhm.
thinking about a divorce, um, kind of like when is it the best time to bring you in?
As early as possible,
Okay.
as soon as possible. And I've worked with clients in all stages. But the earlier I can get involved, and guide you and advise you, and offer suggestions to your divorce attorney or mediator, um, to collaborate on what needs to happen in order for you to qualify for whatever your goal is, the better. Um, it's unfortunate when someone comes to me post divorce and says, "Here's my settlement agreement," and for whatever reason, I can't use alimony or I can't use child support, or they just started a new job and they don't have the history and able to enable that income to be used to qualify. Um, it's a lot. It's additional pain on top of all the pain that person's already been
Yeah.
through. So the earlier I can get involved, the better.
And when you work with someone, do you work with a couple or do you work with one party or the other and never the two shall meet?
Well, that's a great question. Either or.
Okay.
I can be hired, um, to work with both couples, and it's a lot easier if everyone wants to make whatever scenario work
Mm,
and they're agreeable. I can get both parties ready, mortgage ready, when the divorce is finalized. So I can either consult for both, or I can advocate for one
okay.
or the other. So I can work for one person or both. It just depends on each couple and the situation.
So tell us a little bit about, because I never knew that there was something to do with mortgages that was specifically working with people going through a divorce, because there are, so what makes you different? Why would somebody go to somebody like you versus to a regular mortgage lender, for example?
Sure. So, um, I have, as part of my certification, and I have continuing education every year that I have to complete as well. I am trained in areas of family law, tax law, real estate, and of course, the never always changing world of underwriting guidelines. So, being able to find the intersection of all of that and have all of that knowledge, better prepares people, during the process and makes it easier once it's over. Um, any loan officer can structure a loan, but they're not gonna be trained on the tax implications of changing your filing status, how and refinancing the loan. There's a lot going on right there. So I always work with someone's accountant on that aspect. Structuring the alimony and child support so that it can be used as qualifying income, and figuring out how much income someone needs in order to achieve the
Mm,
goals.
mm,
So I work backwards a lot in that regard, because, like, okay, here's what you want, well, here's what you need, and offering suggestions on how to get it, whether it's, reassigning debt within the settlement agreement so that someone can qualify, but still making the other person whole. Like it's a puzzle, and I like to get creative with it,
mm.
and have had some great success, for people doing it that way.
So if you have a client and the idea is for them to keep the house, this is something that
Mhm.
they're discussing as a couple, and Mrs. XYZ wants to keep the house as part of the settlement. What are some things to keep in mind to make sure um, that she's actually able to do that? Because I know you and I have talked before about how, somebody says, I'm keeping the house, and they come to you with, like you said, here's a
Yeah.
settlement, and all of a sudden they find out, well, you actually can't.
Yeah.
So walk us through that a little bit.
Well, what underwriting does is they say a certain percentage of your gross monthly income can go towards your housing expense plus your monthly debt, your debt to income ratio. So I go through all of that. They provide me with their pay stubs, W-2s, tax returns, provide me with their credit report. I go through
I'm
through the
losing your
numbers.
audio.
I'm sorry, my dog's
Okay.
barking in the background.
Okay.
Sorry.
That's okay.
Um, so we go through the steps with the scenario, and see what their income is, what their debt is, and what they qualify for.
Okay.
Stop
Okay.
it.
So it's not like I get to keep the house and everything
No,
is
no,
all
they're
roses.
yeah, you have to they have to qualify because they can't you can't just take a ex-spouse off a mortgage. People have said that to me, like, oh, well, I'm gonna keep the house, I'm just gonna take him off the mortgage. It doesn't work that way. They're both jointly liable, and you have to qualify. So there's a couple of things that can be done. One, there's an assumption. A lot of people are very interested in assumptions these days because rates today are probably higher than the rate that
Mm,
they have currently. Not every loan is assumable. And if a loan is not assumable, you may be able to get an approval for some sort of modification, to take over and release the other party. But that's a long, drawn out process. It is
okay.
something that I can advise and guide people through, but it can take up to 6 months, and there's no guarantee that it works. And you still have to qualify for that. There's also an equity buyout where, if, let's say, the house is worth $500,000, you owe $100,000, and there's $400,000 in equity. The departing spouse needs $200,000. So therefore, the spouse that keeps the house would look for a loan of 300 and some odd thousand
Mm,
dollars,
mm.
pay off the mortgage, pay the ex-spouse, but they have to qualify for that. So you're looking at increasing the mortgage payment while the income is being reduced, because now it's one person, not two. So there's a lot to take into consideration, a lot of numbers to run. And unfortunately, sometimes the reality is that keeping the house isn't realistic. It's
Mm,
not necessarily what is best financially in the short term or long term. And I take that very seriously.
yeah.
Just because you want to keep the house doesn't mean that's the best financial decision. And that's a hard conversation to have, but sometimes it's got to be had.
Yeah. And I can understand that it would be a hard decision or a hard conversation, especially if you want to provide as much stability as possible if you have children, right? No
Yes.
change in
And
the
that
school
and that's
system.
yeah. That is the exact reason why a lot of people want to keep the house. Um, I mean, obviously, I want to help people accomplish their goals, but I also want to make sure that you're going to be okay financially long term, and that's important to
Yeah.
keep in mind.
So you used a word before that I'm not familiar with. You said something about a loan being unassumable. What does that mean? What makes a loan unassumable?
Whether or not the current lender will allow it.
So it's total, so is it arbitrary or is there like
No, no.
logic
So
behind it?
there are certain loans that fundamentally are assumable. The VA loan and FHA loan are always assumable. Conventional loans are technically not assumable. However, in this day and age, when like I said, rates are higher than what most people have, lenders are, I'm not gonna say allowing, but they're entertaining applications to quote unquote assume the loan, but it most of the time you're not going to, or some of the times you may end up with the same interest rate, you may not. So, and there's no guarantee, and it's a very long, tedious process.
And is there anything that you can do when you're getting the mortgage to, for lack of a better word, plan ahead if stuff goes sideways that would allow a loan to be assumable in the long run?
Only And like I said, only VA loans and
Okay.
FHA loans are
So, okay.
fundamentally assumable. But
Okay. So it's not anything
even then, the person who's assuming the loan still has to qualify.
to qualify. Yeah. Yeah. Okay. So, but there's nothing, it's not like, you
No,
tick a box or
no, no.
okay. Okay. I just wanted to make sure because it's all like,
It's
it's
a
all,
good
honestly,
question.
it's all Chinese to me. So I don't,
No, valid question.
so, so for someone who's, let's use the example of a stay-at-home mom,
Okay.
right? And stay-at-home mom is going through a divorce and she wants to keep the house.
Okay.
What are options for stay-at-home moms that can support them in making that transition? And if keeping the house is not really an option, where do they go from there?
Right. So every situation is unique, and
Mm,
every divorce is unique, and everybody's assets and liabilities all different. Um, there are, I mean, with the conventional loan, you would have to show an ability to repay the loan, which is qualifying based on your income and debt ratio. But there are other programs such as asset depletion, where if it's someone who has significant assets, you can use the assets as a quote unquote source of income. So if someone has, for example, if
mm.
someone has $1 million in an account, take the balance, divide it by a certain number, and that's usable income. Now that money
Like,
cannot be used. Go
would a
ahead.
401k qualify for that?
Depends on the age of the person because it's
Okay.
got to be
Okay.
liquid. The idea being that that asset is going to repay the loan,
Okay.
and they don't have to
Okay.
have employment or significant employment. Um, so I've used that program for divorcing but people. But again, it depends on your age and your assets
Mm,
and
mm.
all of that. So I do no cost consultations where I get to know someone and see how I can help them and explain my services and make some recommendations. And then based on each person's needs, it's a little different.
So sorry, I'm stuck on the stay-at-home mom, but for
Okay.
a stay-at-home mom, um, sometimes I can imagine that they might not have a credit history that is as substantial as their husband's. How does one then get started from there?
Um, well, it's so for a stay-at-home mom or a non-financial spouse, um, there's opportunity. You're gonna have to open up your own bank account. You're gonna have to open up your own credit cards. You may have to build credit, right? And I've got lots of strategies for that. I've got,
Okay.
connections and strategies and recommendations and all of that. Um, because you do have to have a credit history and a credit score, and that has to be in the range in order to qualify. Um, so again, I mean, a lot of my answers are it depends. I'm
Yeah.
sorry.
No, 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 it's okay. And I totally get it. I'm just trying to figure out if there are just some general kind of operating rules or rules of engagement or rules of thumb that are good to keep in mind and top of mind as you're thinking about divorce.
Well, establishing credit is definitely
Hmm.
one. If you, yeah, it's rare for me to come across someone who has absolutely no credit. Sometimes
Okay.
it's a lot of joint credit, which is fine and that's acceptable. But if look at opening up something small just to get a credit history going, whether it's a card that you just use for food or, something that you pay off every month, to strengthen the credit history like that's something everybody should do, whether they're
Mm,
thinking about
mm.
getting a divorce or not, is take care of your credit history, um, for sure. Um, did that answer that question?
Yeah, and I think I want to pull back a little bit and just ask you the same question, just in general, for somebody
Okay.
who's considering divorce or going through divorce. What are some things to keep in mind, some rules of thumb, some things like that that are, let's say, going to be more common that can start to get them thinking about, okay, if this is what I'm considering, then these are the things I need to keep in mind.
Yeah, with regards to qualifying for a mortgage and
Yeah, with
yeah,
regards to like, yeah.
okay. Um, hmm. Well, maintain your payment history. Don't stop.
Hmm.
And it's, just divorce is hard, but you gotta make sure that the bills are still being paid because mortgage lates, even due to a divorce, are still mortgage lates, and they're gonna have
Yeah.
a huge effect on credit, and they can make or break an underwriting decision, even if their name isn't on the mortgage. If the one spouse is on the mortgage and the other one is taking it wants to keep the house, underwriting is still going to want to see a 12-month payment history because they want to make sure that it's not a bailout. So maintaining a clean credit history on your mortgage and everything, keep making your payments, um, is is a huge piece of advice, I
Mm,
think.
mm. So from your perspective, what is the ideal divorce team for someone?
Um,
So divorce
you mean
attorney, I mean, just
who
in
should?
general, who, yeah, who should
Okay,
somebody make sure they have in their corner?
gotcha. Well, you need either an attorney or a mediator.
Yeah.
You need a therapist or a support group, an accountant, a financial planner, um, a divorce mortgage planner. Um, you're gonna want a realtor who can give you, or an appraiser because you're gonna need to have a realistic opinion and value for the home, or you guys could just agree upon it. But an appraisal or a CMA, market analysis, is a great idea. Um, yeah, and friends and family who are going to support you
Yeah.
emotionally and be there
Yeah.
for you.
Sometimes that's the most difficult piece, depending on the situation. So,
Absolutely.
okay. Um, Anything else that we haven't talked about yet that you think is important for our heroines to know?
Um, you got this. It's hard, um, but you can do it.
Yeah.
And building a support team around you. You don't have to figure it all out on your own. There are a lot of people and professionals that are available to help you out.
Mm. And, we've all had a story of heartbreak in our life that have taught us something.
Mhm.
What's been a lesson for you that's something that you've carried forward in your life?
As hard as it is, you'll be better on the other side.
Mm,
Better things are waiting for you. And keep your eye on the future, and you'll be okay.
yeah, in French we have a saying that goes mieux vaut être seul que mal accompagné, which means it is better to be alone than in poor company.
I love
So
that.
it's cool,
I love
right?
that. Yeah,
So it's I think that for, at least personally, definitely resonates. And I'm living proof, right? Being on the other side of divorce. Yeah, it sucked. Yeah, I ended up paying alimony for 4 years, but thankfully he can't touch my retirement, which in hindsight was like the best idea I had ever had.
hmm
Um, but I look at where I am today and the relationship that I'm in today, and it's like night and day. So
Yeah.
I agree with you
Yeah.
100%. All right, Stacey, thank you so much for being here. Heroines, if any of what Stacey said resonated, if you have questions, anything like that, feel free to reach out to her. She'll throw her links on how to reach her, and anything else she thinks is important for you to know will be underneath in the comments. Don't hesitate to reach out to her, to me. If you have questions, pop them in under the comments and or in the comments. And on that note, Stacey, thanks again.
Thank you,
And
Alex.
my pleasure, my pleasure. And heroines, we will talk to you soon. Take care, everyone. Bye.
Bye.